Hello, this is Coach Mike from WinningStockCoach.com. Going to start out with our market overview for the upcoming week. Last week we talked about the potential target of 1949.47 for the week on the S&P 500, our SPX chart. As you can see, we closed just 3 cents shy of that. Pretty bullish week after kind of a flat and awkward start, but really kind of shot up there. But Friday was an odd day in some of the technology stocks. Now, I wouldn't be surprised just because of the move that was made if we did make somewhat of a downtrend. But we do still have that longer term target that we've talked about for a few weeks now, 1973.72. I personally think that that may come after either a couple days of consolidation or a little bit of a pullback first. But that would be right now the highest projected target that I do have, 1973.72, and we are still going to have to honor that 1949.47 as a resistance point due to the failure to break it. If it were to get up above that, we could use that as a support point to guide us in some of our long trades and look for some further positive movement, which would assist our positive beta stocks. The DJIA, the Dow Jones Industrial Average, actually performed quite well. It did break above my 16,863.05 target pretty considerably. We do have that long-term target of it, 17,209.51. I gotta admit, I would be shocked to see the Dow hit 17,000, but at this point in time, I won't say it's not possible. I would be watching, though, due to really the weird movement that we've seen over the markets over the past couple weeks, almost into 3 weeks now, where we really haven't seen a lot of buying with conviction. To me, and read a lot of other articles out there over the net, so I would think that there's quite a few out there that may be agreeing to what I've been saying for a few weeks, that we could either just be seeing an algorithmic target being reached, or short covering causing a lot of this jumping. But there hasn't been a lot of forceful buying market-wide to indicate that many are confident in the current up move that's being made. So it's going to be important that you have a support point that you can easily follow and read. Your longer term trades, I would go on your swing points. If you're trading one of the 30 Dow stocks, you could be watching 16,743.63, and that would give you a good point for your support levels in the indice in particular. I've said for a few weeks the small caps seem to have more upside potential. You can see here the Russell 2000, the RUT chart, doing quite well. Had some really strong days this past week, even though it was kind of a lagger Monday and Tuesday. I do have the 1180.23 mathematically calculated target, but really this horizontal line is what I'm watching. Over the past few months, actually even since the RUT made this drop here, I had spoke in my videos and was telling you that, regardless of where it bounced to, I believe this was our indication that the trend would be changing on the RUT. Sure enough, it went up and made a higher high, and I said, that really doesn't bother me. I think any drop we get now would be a double bottom, and then we'd look for a bounce up to a head and shoulders. I've actually had the same markings on my chart for a long time now, and so far it's done nothing to say otherwise. So what I would look for here is for your small cap stocks, which some of the better small cap stocks, your Zillows, your Yelp, stuff like that, are performing really well right now. And if those, Yelp has kind of started consolidating a little, Zillow's kind of losing a little bit of steam. If those start to fall off, I would be taking a glance over at your RUT chart to see how close to what could be a right shoulder, we end up, because if it fails to break this area right here, what you're going to end up with is that head and shoulders pattern. Now remember, a head and shoulders isn't really confirmed until it fails the neckline, so that would have to come down and fail this line. It'd be a considerable drop. But if we do pull back from what would indicate the right shoulder, that would be a suitable short entry. I just think that because the RUT lagged a little bit at the start of last week, that it could actually continue upwards at the start of the upcoming week. So I think we could see some continuation on the small caps. And finally, for our daily charts, the COMP, which is your NASDAQ Composite chart. Using the same tool to kind of project pricing, we're looking at 43.5269, which would actually be a lower high from here. And from our pop here, Friday, well, that was a Friday, so that could be a lot of explanation why we didn't get a lot of volatility. Chart could have wanted to run, but a lot of selling met it, the profit takers at the end of the week. So I want to watch and see how it performs from the 43.5269 level. A pullback from there I think is going to be an excellent short opportunity. But at this point in time, what I'm looking for to say that that's what I'd wait on for a short is just the historical fact that June's typically a red month overall. So with the statistics of that fact being looked at, I look at the fact that, hey, if things want to run the first couple weeks of June, that's great. That would just mean they'd have to fall harder to fall within the same statistical guideline that we've seen happen way more times than not in the month of June. So looking at the NASDAQ, I think it's got a little bit more it can inch out, and I'm going to be watching for the reaction, whether pullback or break from this target price area. We've seen quite a few NASDAQ stocks kind of bottom out recently. I went long in Amazon this past week, and it's kind of a really tight spot we're in right now. So I think we need to kind of observe these target areas, observe the reaction to them, and then make our plans accordingly, using these areas as either support or resistance, depending on which side of the line the price is on, as we move forward from the break or the hit and pull back. So that's what I'm looking for in this upcoming week with the indices overall. I'm going to take a quick look at the weekly chart without getting too long in the video this week. And the weekly chart that I really wanted to show here was the SPX weekly, the S&P 500. This purple solid channel line, that's the channel since the markets bottomed in March of 2009. And this past week we did close above it. This could be full indication of a breakout. We did kind of come right up just shy of one of our Fibonacci targets. We've got another Fibonacci target there as well. But there's another indication that I want to show you that correlates really well with what I've been talking about at this dashed purple channel that started at the induction of QE3. And, we started talking about it a lot when we got this failure here. I'm going to show you a certain resemblance here. And the correlation I wanted to discuss was, if you look at my RUT weekly chart here, we saw that same failure of the channel, this dashed purple line, that had started at the induction of QE3. This baby blue or teal colored channel, this is started from when the markets bottomed back in March of 2003. And at the point where we had that failure, we went up and closed just above the line, and it ended up being the highest close that the RUT has seen since. So this upcoming week to me is going to be really interesting to see if the S&P 500 were to follow this same pattern that the RUT had set up and that I'd been talking about for the past 6-7 weeks with the S&P 500. This is Coach Mike with winningstockcoach.com going over my market overview video for the upcoming week. Encouraging you to plan your trades, trade your plan. Best of luck to you, and God bless.